Good day, fellow investors. Just last week I did this video on Google with a stock price target of 250. The summary of it is that the P ratio is just 22 compared to the 30 of the market. Google is still growing 40% per year, and all else equal, it should just catch up to the market's valuation, and there you have a 170 to 250. But I also said that the key risk is AI, and that when you see people searching on AI, not on Google, that is something to watch. Funnily enough, I was with a dinner with friends just the day after I filmed that Google video, and we discussed Howard Marks, how he has great memos, great videos. Check this risk video from Howard Marks, is spot on. But the question was, what is Howard Marks's long-time return? I said that he is a bond guy and that the returns will likely be somewhere there, mid-high single digits. And we discussed that. Then we asked ChatGPT, and there you have the returns, typically in the 5 to 10% range. I think we had a more specific answer at 8% depending on how you are asking. And this got me thinking. So I just said watch the risk with Google, and here we have people not going to search something, but going to AI. And then I also got this email. You can send me an email at investwithsven@gmail.com, and someone used AI and some programming to analyze the 139 YouTube comments we got. 40% were positive, Google strength, strong financial health, long-term potential, neutral 30%, undecided as questions, and 30% negative, doubts about Google's long-term market position. So the market is pretty mixed, and that also explains the 22 P ratio that Google has. So the market, your comments are uncertain. And let's really dig into the comments to see what's going on, because this is also the key. Here on another video, someone says, please turn off your comment option since it's filled with 99% scammers. You risk your reputation and possibly lawsuits when someone loses their savings to the scammers. And I think Google should AI that and solve it, but Google AI doesn't work. They cannot solve the comments and solve the spam bots. So that's first. Maybe the 50 billion they're investing in AI is not as smart. Nevertheless, there were comments about antitrust. What's the worst that can happen? The worst that can happen is that they spin something off and then it's separated and it keeps making money. But okay, another great comment here. What about stock-based compensation? 60 billion in buybacks, and then someone said here that 20 billion is for stock compensation, so 60, it is $40 billion. So that's already 2/3 of the buybacks. That's something to keep in mind. Then, is there a reason why EPS was used instead on free cash flow? Yes, free cash flow is better for investing. They are investing a lot in AI, and perhaps better to free cash flow, but that also depends on how AI works out for Google. We will have to see. And you should continue talking about the company risks. That's best part of your channel and value investing. That's correct. No need to please the algorithm by talking good about Google. So let's keep on digging about Google and AI. Who will win the AI search is still an open race, I believe, and that's very correct. When I search on a single word or single thing, I use Google. But if I have a question, I use Perplexity or Search GPT, so I move more and more away from Google when it comes to more complex search. And this was a great comment. To be honest, I don't know if they're being slow with the AI or if they are just deliberately not trying to lead. And this is something key. They make money when you type something into search, then you first have free advertisements, and only then you have what you have been searching for. So if I search for London restaurant, the first two are sponsored, and only then you have the results that questionable whether they are sponsored or not. If they would develop an AI solution now fast, then they would cannibalize their own search income, and that's the key for Google. So they cannot put in AI, and that is exactly where the others have the opportunity to get in, because if Google goes all AI, they eat up the cash flows that are coming from search that they need to develop AI. That's the game. And there is this 40 billion on capex pendix. If it's not wasted, then will work, but okay. However, perhaps I think we should listen to this. This is the guy thanks to whom I am on YouTube. I was devouring his videos before getting on YouTube. So let's listen to what Gary Vee has to say about Google.
Does everybody understand that Google search is fundamentally dead within the next 7 years? That everyone's going to AI? That ChatGPT just wiped out this entire room? Everybody who just stood up just told me that the yellow pages is their life. This whole room just stood up and is reliant on a platform that is getting massively disrupted right in your face right now. How many people here are already using ChatGPT or Perplexity instead of Google for things they used Google for just 2 years ago? Raise your hand. I think we can all agree that the people raising their hands, I'm not talking to a junior high, 40, 50, 60-year-olds are raising their hands and they are using AI now instead of Google. Don't sit here and do what all of you do, which is put your head in the sand when a wave comes. Go find your surfboard and ride that wave. Very hard to click a fucking Google ad when you don't even go to Google in the first place.
I have been thinking about Google, and given the risk there, given the investment in AI, given the cash flows, I have to increase the risk, thus bring it from here, market risk, lower, let's say here, also to change the cash flows, because as things move fast in the next few years, Google's cash flows will not be there. They are now at a P ratio of 20, so that's 5% plus some growth and maybe even less growth. Thus, Google is a higher risk. Let's put it somewhere here. That is something very important to think about when it comes to investing. And that is also something that I'm very thankful for the comments. Whenever I share, I get so much from you back, as there are always these different perspectives. Now, with Google, I see more and more people using other things, which is a bad sign. That's usually how it goes with tech. Slow, 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 and then everyone starts using something else. We have seen it often in history, and that's something to keep in mind. So, yes, this explains why Google is cheap, the cheaper of the Magnificent Seven, but perhaps we will see what will happen. For now, for value investors, watch it, as I say always, watch it before it becomes too late.